much further that is. So I'm looking for 100x. So, oh wow, it's way higher than I thought. Hold up. So my ultimate target is like here. Let's just put it there. That's good enough. I don't want to freak you guys out too much. And look, if you're watching this a year from now and this didn't play out, my thesis now can change by the time you watch this video, between the time you watch this video. I could have sold Toshi. If you're watching this a year from now and Toshi dies, I might have already sold it by now. So don't think that, oh, he has Toshi here, he lost all his money if it died. I probably would have exited before that happened. So just take this as a case study that you can use at any time to sort of understand what an asset can do. So look, Toshi's gone 17x from the bottom, and I expect an 80% decline, a higher low, and then eventually higher prices into 2024. When we have all the Coinbase retail inflow going over to Base, which is how this thesis actually plays out. So Base doesn't have any inflow right now. This is just people front-running my narrative that I made on Twitter, right? Everyone's fucking following me and sharing around my original thesis. So because this inflow is short-term and because it's sort of the wrong people, I expect downward price action, sort of a month of accumulation, and then or however long that is, and then eventually prices go up. So as an investor, high volatility means dealing with big drawdowns. So Toshi's a classic example of this. I won't be selling any Toshi because I understand that volatility is just a part of crypto, and I'm willing to hold to experience the 100x, right? Between me and 100x is an 80% drawdown, multiple times. And Kun, another tweet here, volatility is not risk in itself. Price down in short term is only risk if you need the money now. Imagine a situation where price drops 30% and then is back at that price in 2 months. Did you lose money, right? It's just, volatility is just short term, if you do it correctly. And here's some more tweets. For investors in crypto, this super focus on trying to miss drops on short time horizons comes from a lack of risk management in a portfolio and misunderstanding of risk. It comes from greed of trying to time every turn to get more coins, but results in underperformance. If you have great entries on Bitcoin or any fundamental alt, you will be much better off just holding and adding to good entries than trying to manage risk. The biggest moves happen 15 days a year, so you might get a few local tops, but invariably they miss the big moves. So you can see with Toshi, right? It went up from a 10 million to a 30, $40 million market cap in a week. The majority of the gains for Toshi happened within 7 days. Isn't that funny? So if you try to sell to mitigate the downside volatility so that you can you can sleep at night, you're probably you're setting yourself up to miss those 15 days a year where the majority of the gains happen. And there's a statistic that says that if you miss the best 10 or 12 trading days in the stock market, you actually lose money. So statistic, if you miss the best trading days in stocks, you lose money. Let's have a look. If an investor were to simply miss the 10 best days in the market, they would have shed over 50% of their own portfolio value. The investor would finish with a portfolio of only 29,000 instead of 64,000. And this is even more relevant in crypto because crypto tends to pump absolutely ballistically during 10% of the time, and that other 90% of the time it does nothing. So this is just how it works. So here's some general rules. Oh, my computer's dying. Hopefully I got enough charge for the rest of this. So here's some general rules for dealing with crypto volatility that you need to follow in terms of developing the correct mindset. So volatility can't be removed, as we just discussed. You must embrace it. You have to deal with it. Selling to mitigate the volatility to the downside on an asset you believe goes higher is trying to maximize for preserving 20 to 40% of your money and potentially missing 1,000x upside, which is a bad idea, right? Real risk is permanent loss of money. Risk does not equal volatility. Volatility is just the standard deviation in prices along the way. Many are now sitting in pain. They know prices will 10x from November, but they sold because of downside risk, right? Which is just volatility, okay? The key to making money in crypto is to do things which set you up for asymmetric upside. When you sell to not lose 20% and you might not make 1,000% now. You're maximizing for the aspect which is not asymmetric, which is minimizing the downside, right? You should be trying to maximize for capturing the 1000x, or not the 1000x, the 1000% return. Not so much focused on trying to minimize the losses. Losses are just part of investing. Volatility is the price you pay for outsized returns. It is prices dropping 95% that gives us the ability to make 2,000% returns. So Toshi going down 80% allows us to buy at a $5-10 million market cap again. And then when it goes to 300 million, that's what gives us that huge return. It's the fact that it went down so much that we got a good entry, right? Focus on capturing asymmetric opportunities, not removing downside. We just discussed that. If you don't buy the exact bottom or sell the exact top by default, there will be a period of time where you feel like you made the wrong decision as price goes against you. This is normal. Deal with it. So for example, imagine you, let's put this back in log to in regular. Imagine you sold Solana at $200, right? Imagine you sold Solana here, right, in this region. Price for 2 weeks after you sold it was talked about. Solana was talked about everywhere on Twitter at the past top. Everyone was euphoric on it, and you made the wrong decision, quote unquote, for multiple weeks. So you have to deal with the fact that you're never going to sell at top, and so there's going to be a period of time where you feel like you did the wrong thing, where everyone tells you you're an idiot, a moron, and that you shouldn't have sold. And that's just a part of crypto, right? If you don't buy the bottom or sell the top, you're going to have a period where you lose money or where you did the wrong thing. And that's just volatility, which is fine. Now, your goal is to position early into an asset's uptrend so that temporary downside volatility eats into profits, not initial capital. So for a Toshi, right, I'm okay dealing with an 80% drawdown because I bought it so much lower that I'm comfortable losing a little bit of profit in the short term because I know what the long-term goal is. If I bought Toshi now and I have 80% of my money lost, that's a way more painful experience than just losing 80% of my profit. I'm much more comfortable losing my profit than I am with losing my initial capital. And that's why it's really important that you get into these things early, because it makes it a lot easier to deal with the volatility when you're dealing with losing profits, not initial capital. And last but not least, in investing and especially trading, volatility and liquidity is a recipe for success. So if you have an asset which is highly liquid, meaning you can buy and sell large positions with very little spreads, and spreads meaning like you sell it at $1 and you actually get it sold at $1, not at $1, not at 99 cents, like you get a good price. So you have that, the liquidity, plus the volatility thing goes up and down a lot. That's a recipe for success. The volatility is a good thing. I love the volatility. That's why I'm here. That's why I don't have any fucking stocks in my portfolio. And a lot of you guys, this is funny, this is a funny tweet. A lot of you guys are like, oh yeah, I can handle the volatility, I can deal with it. Imagine you hold Toshi right now. Are you going to be able to deal with the fact that this is probably going down 80%? I really don't think people are ready for that. I don't think they are. Most people say, oh yeah, I could handle an 80% drawdown. You probably couldn't. How many people can actually handle the volatility? Right? So that's just sort of how it goes. Now, that's everything on volatility I think we covered here. Thank you for watching. I'll see you in the next video. Cheers.